Hello, everyone. TGIF, which stands for Thank God I Found ForexAnalytix. Everyone see my screen okay? Hi, Kevin. TJ, how are you? Brock? Money? You have a black screen? Okay.
Hey guys, do me a favor. If you saw my recent tweet about this webinar, retweet it if you can. Greg is coming today, so I just wanted to say that really quick before Dale got started. Thanks, Dale.
Yeah, please do that.
Yeah.
Can you guys see my screen now?
I can see your screen.
Okay.
It says webinar starting shortly, but that's all it says.
Oh, gosh. Okay.
Is it
How
paused?
about now?
Oh, yeah. There you go.
Okay, thanks. Thanks, Blake. Yeah, Greg of the Wizard. What a treat for a Friday. Kind of gives you a lot of ideas to digest going into the weekend and compare it to your work. Greg, what I do with Greg and a lot of the team is I pay attention to what they're projecting and forecasting. And just like anyone else, I don't just, do the trade. And if you're a discretionary trader, you probably shouldn't either. But if you're lazy, probably better than, just any kind of impulse trade that you're going to do on your own and say, I think I'll give it a shot. But what it can do for you is give you a bias of what they're looking for, and then you apply whatever methods that you use to look for that side of the market and opportunity on that side of the market. So I do that with all the team guys that I watch every day. All right. And I'm telling you guys that it's helped me a lot. I'm a big believer in a community and a big believer in finding a mentor, and you have them right here. And you could have them all day long as a member, in the chat room, plus guys that make a living off the market in there. So, surround yourself with good traders, you'll rise to that level. Yeah, he forecasted the swing down. Yeah, he's very good. Yeah. Okay. So even when you get something from someone who's usually a critic, I think that we should, probably copy that for in memoriam. FX traders saying something positive about our team. I know I shouldn't engage you, but thank you. I'll let Greg know. So what do we have? We had that bounce in the dollar, and I participated for 30 pips, and it's better than a sharp stick in the eye. And this bothers me. So I think we didn't quite hit this blue line. I think we're going to try. I don't have them up anymore, the fibs, but this line's going to come in right around the 78.6 level, around 92.34. And next week's going to tell the story in the dollar. We either hold above this low, or we're going to 90 and then 88. That's the way it looks to me. And if you don't want to, here's ice crack by trying to buy a break next week, you just wait until we're back over 380 right here. It's really a long-term trend line. Take a look at it. I mean, it goes all the way back to the highs. So there's your daily. I'm trying to move you guys out of the way. Yeah, it goes back to the 102, the high that we had after COVID, when the market was crashing, people bought the dollar. So you have a hit here, you have a hit here, and you had a hit here where it failed from, and then here. So this trend line might have some validity. Looks like it's over 93.80. We'd be coming out of that. Okay, so I'm not doing anything today. Let me remind you, I'm a believer in this. Unless there's an NFP, don't try and make your week on a Friday, because Friday's a lot of book squaring, unless you have like a number NFP where there's some volatility that you could scalp around after the number. Looking at S&Ps, I look at this, and my tendency is to want to be short. Well, we're right up against this downtrend line too. We're underneath the off number, 2-week off number is 34.83. Let's look at what kind of week we have going in. So right now, you have a 2-week reversal. All right, but off the lows, and you have 2 closes in a row up here, right around this level. I don't know, my trader intuition tells me to wait, that we could still, challenge a high. Maybe we rally up to this downtrend line, which would be back at the old highs. But you just look at this, and it's a little extended to be a flag unless you increased your TF. But if you want to be short, not a bad area to try it, risk 20 handles and see if people are afraid to go home long over the weekend. And oil is, trying to hold, but I'll tell you what, under 39, and we're having trouble here after this reversal day that we had. And I know Greg is a negative. Greg Skyped. Take a look at crude. I think it was this day. So we're having some trouble here. I mean, you could be short here and you risk the highs, but not 1 pip over the high, maybe 30 in case it's just a stop hunt. And, we start taking out some moving averages here, 39.60, this low, and then 39. We start breaking this support pivot line at 39. I think 36.50 is next. And then, Steve and some of my other sources that I want to thank, my sources that I do intelligence gathering with, which includes this whole team, and outsiders, mid to low 30s coming. So, and this should top, I mean, if we follow the pattern, crude should lead before the indexes. So we'll see. It looks like it may have begun. So everyone have a good Friday, and who's going to take a step and make a commitment to improve their own trading and open their wallet and let all the moths fly out of there, because you don't open it that often, right? And join our community as a thank you for what we're providing. Yeah. Anyone out there? Raise your hand. I tell you what, anyone who joins today, I'll give you a half an hour free consult. You could ask me any question you want for half an hour over Skype. I'm sweetening the deal. And you could get a hold of Joe. All right, Blake. I tried.
Hey, good effort.
Yeah.
I want to say thank you guys for those of you that just retweeted the link with Greg coming on. It's always nice to have him here and to get his views. Therefore, I'm not going to spend a lot of time talking today. I want to just get into the charts and get into what we're seeing. So this way it doesn't take away from Greg as he's here. His views on the markets are usually, so well received, especially by you guys. When he's doing, and it's mine for me too, because it's a viewpoint that I don't always see, that I don't always get to see, and I'm not a good Elliott wave person, so it's nice to be able to get his point of view on what he's seeing. So with that being said, I want to start off with just going through analysis, but before I do that, I want to talk a little bit about last night's debate. I watched most of the highlights, and from what I gather, because I just didn't want to sit through it.
We were watching the football game.
I was watching a little bit of football on my mobile while, kids' soccer practice. So it's, you know,
Yeah.
it was
Yeah.
more important to me. I didn't think it was going to be a market mover, but one of the things that the takeaways that I got from the analysis that I read is that Trump did a good job, and I think the being able to moderate with, you know, being able to turn off the mics was great because it allows people to you know, it allows people to hear the opponent's debate points. So not only do we get to hear, you know, Trump and Biden not stepping on his feet, the other way around. And so anyway, that because of that, I think it really actually helped Trump more than anything, because the analysis that I read is like, you know, he was more subdued, and you know, it was, and that's probably because he just didn't he didn't have the opportunity to really, you know, jump on Biden probably when he wanted to. So anyway, but the most of the takeaways were that it's probably not going to sway the vote, you know, because Biden didn't make a, you know, disaster of himself either, from what I understand. So anyway, it's not going to move the needle at all, at least right now. And you can see the markets are not, obviously not affected. So I just wanted to make that point before we get into the charts. Now, the euro has bounced quite aggressively. And if you guys didn't know why it's bouncing, and I hope some of you got long down here as the dollar was strengthening below, pushed the euro below 118. The 50% retracement was really key support. This is the previous trend line. I think all week we've been drawing this. Oops, not in green, but right. And that is what has happened. It dipped a little further than I thought. I actually thought we were only going to make it to about 118, to this 38% retracement, like 118.05. We actually dipped to the 50% retracement, or really close. And that happens in Asian trade. You know, if you guys, Asia is one of those places that, especially in very thin liquidity, I mean, they just start taking out stops, and there's no one to stand in the way. So you can get these violent moves in Asian trade and go, what the hell just happened? And that's what happened here. But as you can see, the euro is rallying back, and let's figure out where resistance is today. So we are just past the 618. We're probably at the 78% retracement right now at 118.60. Let's see, if you read ForexAnalytix and you read the basic technical analysis this morning, the euro dollar has rallied just above the 618 as the bounce from the sub 118 level materializes and could extend to the 118.60 level as well. That's when we're at 118.46. So here we are. We've now reached it. This is 78% retracement. And if I had to guess from here, if I had to just imagine what's going to happen from here, it's going to be something like this. So I guess what I'm trying to say is, if you're long euro dollar, you got to be a little careful at this point. I mean, this is a place where you could see some profit taking from overnight. I'm going to write down resistance as being 118.60, but also obviously the recent highs at 118.80. So let's write that down. 118.60, 118.80. Still bullish. So if you guys, you know, hopefully we're picking up the euro below 118. I think any dip back down to 118 is going to be an opportunity today. I know the lows today are 117.80 something, but I would just be looking for dips back down towards 118 if you can get it, really, more than anything. Okay, cable's trading heavy. The bounces have been limited, and you know, I think we have to start watching, you know, this support right here, just in case the dollar does strengthen a little bit. So that comes in at 130.50. Okay. And below 130.50, you know, the next thing you know, we will be challenging this 130 level again. So I think we have to write it down because we're not too far away from it, and it is possible. Especially with Brexit headlines, all that fun stuff. Resistance today is going to be the spike high. Maybe I'll give it a little bit more, actually 31.25. Okay, we are range bound. Aussie. So here's your Aussie dollar. The Aussie has stopped at the 618 retracement. That was the spike high. Now this is a risk. I'm going to show you something right now. This is a risk for the Aussie.
Yeah, back underneath it, like, yeah.
You see that spike high, Dale?
Yep.
Boom, 618, right?
Yeah.
See what it did here? Squeezed everybody out, right? You were short, double top, you got squeezed.
So back underneath it, false breakout, is that what you're
Yep, that's right. You get back below here, and this is where you can, look for another move back down to 71. So this is 71.30. Call it 71.30. Oh God. I'm going to call it, well, first of all, we got to write down 71 and then 71.35, right?
Yeah.
So this is where you catch everybody off guard. Like all the people got long, all the people got squeezed out. This is where it turns. Okay. Now, that doesn't mean that, we're holding right now, but as long as we're holding above here, 618, and quite possibly we could make a move to the 72-cent level. So I'll have to write that down. Okay. Kiwi. Now, the Kiwi, okay, let's look at the longer term here. So let me delete this. What is that? I'll delete that for now. Okay. So previous highs were right here at 66.90. And, thinking, oh, well, this head and shoulder pattern, but what's to say we couldn't reach higher? And that's what we were talking about yesterday. Now I have orders. Actually, I canceled them already. I had orders to sell the Kiwi dollar on a rally to 67.20 overnight. I was hoping that we'd hit this 127% extension because this is the high from back here in July. We didn't quite reach for there yet, and I'm not saying that we can't, but I think that's going to be your next resistance. Support right here for today. It's going to be 66.80. And it's not bullish. We're still in a range environment. Dollar Canadian. Dollar Canadian is actually supported much better than these other commodity currencies. You see the Kiwis that breaking out a little. The Aussies bounce pretty aggressively. The dollar Canadians come off, but we're still really holding a lot of this support. So today, 130.80. Resistance, 131.80. So that's it. But I think the dollar Canadian is actually acting a little bit better than the rest. Speaking of which, here's the dollar Mexican peso. It's trading pretty heavy, actually almost to trend lows here. That comes in at 20.84. But remember, this trend line comes in right around here too. So 20.84 is going to be really key support. Whoops. And resistance is, well, you can see that spike low right there. It's going to be that 21.25. I think we've been writing that down almost every day. And we're threatening to go bearish here. This is threatening to go bearish. It's not yet, but we're, getting close. Okay. Hold on really quick. Where are we going? Dollar Swiss. Here's the dollar Swiss. Support 88 cents. Resistance 90 for no, that's not right. Yeah, I guess that'll be right. 91 for now. 91 cents. Actually, I'm going to do this 91.10. So we can drop all the way down to 90 cents, and then 91.10 is going to be resistance, but it's really just in case things get a little crazy. 91.60 is more important up here, but right through here, right through there's like a lot of little resistance levels that come through, but probably deal with that one first. Okay. US dollar, Norwegian krona. This is one of those other pairs that it's been holding up pretty well. I know it's a little heavier today as the euro is stronger, but we need to pay really close attention to this 917 level. I know we can go down to 912, but 917 also should be watched. Then 940 is resistance. And I want to keep an eye. I think I've explained this to you guys. I do like to trade Norway. I like to trade this pair, and I know Stelios does too, right, Stel?
Yes, I do, and I actually agree with what you're saying. I think we're at the risk of a dollar spike, and you know how Norway reacts to that. It just the krona gets dumped straight away.
Yeah. It's one of those that if we see a dollar reversal, these moves are violent. And if you've never traded the US dollar Norwegian krona before or Norway before, I know a lot of bank traders, a lot of the guys that I trade with that used to trade for these bigger banks, they'll trade the Euro NOK, and the Norway Swedish krona, they call it the Naki Saki. They play a lot of these Norway currencies. If you haven't traded them, and I've been for many years now, but try it with the smallest position you can just to get the feel of it. I like trading them when they move. Well, yeah, I like trading anything when they move, right, Stelios?
Yeah.
I mean, I guess the point could be made for that too. But no, this is one of those currency pairs that I actually appreciate trading. But anyway, all right, let me finish up here so Greg has some time. Dollar index. Let's go ahead and get into that. So remember, multi-year trend line from 2011 to today. It's all right here. 78% retracement, very important, which comes in at 92.40 or 92.40. Resistance. I think yesterday we wrote down resistance right here as 93. We did manage to make it to 93.15 before turning lower. So I guess we have to write down 93.15. Okay, dollar yen. Now, I traded the dollar yen on the short side a couple of times yesterday, and I took it off at the end of the day. I think I sold it at 89 or maybe spiked to 90 maybe. I sold it right here, and then I closed it not for too much because I just didn't want to deal with it. But I like how it's holding where it's supposed to hold, which is 105. I just didn't feel like holding the risk because, you know, it's the dollar yen is one of those pairs that still is, you know, well, maybe you don't know because you're always sleeping, because Europeans are always sleeping at that point. Man, dollar yen's one of those things that, you know, the Tokyo fix or the open, the open right around, it's around 8 p.m. Eastern time. Dude, you can see some really nasty spikes in the yen if some flow related stuff hits. And I'm like, I just didn't feel like dealing with it last night because I just wanted more family time. And I knew that the debates were happening. So I'm like, I just took it off. But technically speaking, the dollar yen's holding where it needs to hold. So what that means to me is this is where it's important, right? So it's 104.35 and 105. That's it. We break 104.35. I turn instant bear in the dollar yen. But it's been holding the 105 level perfectly. You know, and I mean, I know we went to 104.95, but it's what is happening? Whoa, 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 whoa. What's going on? Cable's ripping right now.
Done.
What is happening?
Oh, Francis Macron laying ground for fisheries compromise in Brexit talks. This is from French fisheries industry sources, whoever they are.
Wow.
Well, that's big. That's big. If this is true, I'm surprised we're not rallying more. If this is true.
Wow. Thank you. Thank you. Wow. Yeah. So look at the cable just ripping higher now. I just sold the euro sterling at 50. I sold it at 54 and closed it at 44, like right here, because I knew it was moving. I just didn't know why it was moving. So hold on. I'm sorry. I'm just looking around. That's big. That's big news, right?
That's the main sticking point. It has been, and I'm really surprised that
laying ground for fisheries compromise and Brexit talks. French fisheries industry sources. That's okay. It's sources. Yeah. It's sources, folks. Sources.
Yeah, sources. Secret source.
All right. Always sources. Always the damn sources. But I mean, that obviously that's. I really was looking for last night. I was really hoping the euro sterling would have got a little higher. I was looking for it to trade up towards 91 again, and I was going to sell it up there because, like you, Stelios, I believe a deal is going to get done. I just, you know, I want to get the right price for it, and I don't have any exposure right now. So
I wanted 92 for euro sterling. I've missed it well and truly now. It's okay.
Yeah. So I do believe that a break below 90 is going to be very bearish. So you know, I like a sustained break, like a daily close below there. I don't have any exposure now, so I'm just whatever. It's it. Okay. Let's go. What was I talking about? I need to do this so Gregor can talk. Oh, gold and S&P. Okay, this is easy. Easy peasy, nice and cheesy. Oh, easy cheesy, nice and peasy. No, easy. Hell, just because it rhymes doesn't make it right.
You're a poet and you don't know it.
That's right. I'm ready for a fight. Okay. Same as yesterday, but I'm going to remove that because we're at the trend line resistance right here. But this is 3480, same as yesterday, right? 3,400, 3,480. You guys wake me up when we break out. Wake me up before we go. Here's gold. Now gold held support. We had this false breakout. Yeah. And I got out of my gold. I I got whipped around because I bought here, sold it here. So I got whipped around in it, and maybe, just maybe, it looks just
Yeah.
like silver.
Good imagination.
Well, there's silver, right?
Yeah.
So here's gold. So I'm going to write down 1895 the support.
Well, we get one more shot down on the dollar. We could get some follow through. Take out that high we had this week on the breakout, Blake. I don't think it took out the high from like 2 weeks prior. So, you know, there's a lot of buy stops above it.
Yeah, you know, I don't know. All right. Well, hey, you know what? I'm going to let smarter people come in and try to figure it all out.
Okay.
Go ahead,
I
Stella.
have,
I'm just kidding.
That rules me out. Then thank you.
Yeah. So it's only Grega. All right.
Yeah,
And
at
us
least-
dunce is us. I have my dunce cap on, Blake.
Is
So-
Greg here?
I don't know.
I don't see him yet, so he might be here.
Well, then you know what? This is a perfect time for us to talk about Stelios. So Stelios, how's it going, man? I just wanted to say hi. I know you didn't get a chance to speak this morning, and maybe you should be able to say your piece before.
Yeah, sure.
Yeah, before Greg
Get it all out for the weekend.
Get it all out. So what's up, man?
I don't have that much to say, but you know, a bit more of the usual. I watched some snippets of the debate yesterday. I thought the move to mute the mics was good because in the first debate there was a lot of it was a lot of noise at some point. So I thought it was good, but really the debate didn't give us anything. You know, and I think perversely, what people were expecting was for Biden to kind of screw up somehow, and he didn't. And Trump, okay, he's going to be Trump. We know him. So I don't think we got anything new. So I'm guessing the polls are going to be showing Biden still in the lead. But I've said this before. I think it's going to be very close.
I definitely don't believe the polls. Here's the thing about. I'm going to just give you my observation from an American's point of view. And this is where the rubber meets the road, I think. Trump's base is extremely motivated. You could be in the most, like I'll give you a good example. Like the guys in my office are in, the guys that I trade with, they're in Connecticut and they're in the New York area. And that's predominantly a very Democratic area. And let's just say, for the most part, anybody who's lived in New York City that has known Donald Trump for, their entire lives, if you will, just for the most part, I'm talking about the majority, just don't like him. Anybody who's in New York. So, I mean, so you can imagine like the whole area.
That's because he used to live there.
Yeah.
They know him.
Look, I've been watching Donald Trump for 25 years on CNBC. I've followed very closely what he does, and I don't even live there. But the people in that area are not, for the most part. And I'm speaking majority, not obviously there's a lot of New Yorkers that love him too. So, but you can see like their parades. They'll have parades down the freeway with Trump supporters. They're very motivated. You're not going to see that with anybody who is a Biden supporter. You're just not. I mean, here in where I live, you'll see like groups of Trump supporters sitting on the side of the road, screaming and yelling at traffic as you're driving by.
Yeah.
You won't see.
Hey guys.
Hey, Greg. You will not see that for Biden supporters. So you cannot dismiss the how close this race could be. Like I said, Trump supporters are extremely motivated and supportive. Most of the people that I know that are, have switched from Trump to Biden for the last 4 years, they're like, I'm doing it. I'm not happy about it, but I'm voting for Biden. That's the attitude. And so you're you know, but that doesn't mean that their vote doesn't count either. So, you know, but I still think it's going to be a very, very, very close race. And that's what's going to make it very tricky for us in the next week and a half. So with that being said, here's your bias chart for those of you that missed it. I want to make sure that you've got it. And Grega, how's it going, man?
I'm fine, thank you. Thank you.
Hey guys, before you get started, Blake, you told us a few poems today. I just have a real short one. Can I do it?
Oh, for Christ's sake!
Come on, is it okay? The title is 61.8. All right.
Really?
Okay. 61.8. Do you feel it resonate? And as soon as you think you know the tricks, it stretches to 78.6.
That's good, actually. I like that.
That's it.
Yeah.
Better than Blake's poems.
Hey, I'm still here. Just no.
Yeah, you know, Stell's a fan of mine. What can we're fan. Anyway,
I thought it was absolutely the most beautiful thing I've ever heard you utter, Dale.
It's very romantic. Fibonacci is very romantic.
I loved it, Dale. All right, hey, we're taking enough of Grega's time. Grega, it's all yours, man. Let's hear what you got to say. How are things, and which way is this market going to move going into the elections? What do you think?
How are things in Waveland?
You tell me.
All right. Okay, if we break 3480, or if we break, everybody here knows this, or if we break 3400, I'll tell you more. But until then, your guess is better than mine. So, I mean, you know, I was just telling everybody that, you know, this is going to be a very close. I think this is going to be very close and election, just because of the way everything's getting counted. You know, here I don't know if you guys saw my tweet yesterday. For those of you that are on Twitter, I actually tweeted that the state of Arizona counted my vote. They got my vote, and it was verified with my signature. Man, our state is actually quite on it. I wish I could have said the same thing about our coronavirus response here in Arizona, which was not on it. But the way that we were doing voting is great. But that's the exception. Most states are going to be, they're fumbling through trying to figure out how to, you know, get, you know, 10-year-olds to count votes. I'm joking. It's like, you know, it's a much bigger deal in other states where the voting process is going to take longer. So it's going to be not only close, we're probably going to have a lot of, you know, volatility as far as, you know, Trump wins. Wait. No, Biden wins. No. Wait, hold on. No, I think Trump is winning. You know, I think a lot of that's going to happen over the course of a couple of days, if not a week. So I don't, you know, when it comes to the S&P, it's like, what do you do here? You know, I don't, but I do say, Grego, that we are right up against our all-time highs. So that's generally pretty positive for the markets, right?
Yeah, I mean, you know, always when there are very important events and markets are trading close to all-time highs, there is a much higher probability that those highs will be taken out because of volatility before market maybe makes an important reversal.
Well, let's take a look and see your charts. I'm going to let you take over here, and I'll be here with Dale and Stelios, but I'm glad to have you here, and I know everybody's excited to hear what you have to say.
Okay, so Dale, you're here.
Yeah,
you could share your screen.
Undid my chart so you could take over. There you go.
Okay, so the S&P 500, I mean, we are still trapped in this consolidation here since market made this high in September, and looks like that this consolidation can be a triangle, meaning that we are not going to see a completion of this wave so soon. So another week or 2 weeks till we may finally see a breakout. I think that there should be enough of the price action on the chart to suggest that we are actually headed higher, because the first drop here from September was made by three waves. The following rise was very strong, but also made by three waves. So that's why I'm favoring the idea of a triangle. It's an ongoing consolidation, and I'm just curious to see if we can hold the current support levels after today's close. Then I would be favoring even more the breakout after we have these waves D and T also in place. But so far we are just in the middle of this consolidation, so it will be a very tricky until we have these legs in place. So for now, I also have an eye on the second support down here around 3,300 to 3,350 level. So that appears to be quite important zone as well if we maybe suddenly break towards lower prices. But generally speaking, I think that there's still a very healthy uptrend. We know that US stocks are at all-time highs. We are consolidating, while German DAX, if we look there, still didn't move anywhere close to those highs. So in my opinion, if DAX, which is weaker, still has a room to clear these earlier highs from 2020 out, then obviously the S&P 500 should also remain in uptrend. So I'm looking here at very clear price action. Actually, no doubt we have here an uptrend in progress, but now just trying to build a base here. And so far we're reversing very nicely, actually, from that lower trendline support of this ongoing triangle that I'm tracking. So maybe, in fact, this triangle is coming to an end very soon. If we look at the 4-hour chart, we are bouncing from very interesting levels here. And this current bounce is quite aggressive. So I will be watching today's close. As I said, if stocks could, US stocks will stay strong. And also if we see the same pattern here, obviously in DAX, then I think that more upside could be coming when looking weeks ahead. But of course, the opportunities will be after pullbacks. Also, another wave count that I have here in place is actually showing us that maybe first 5-wave cycle is already finished and that we are going to see lower prices. But I would be looking for that potential scenario only if we drop below these September lows here. In fact, I'm sure that some would probably be looking for, just let me hide this, maybe even for a head and shoulder stop formation here. If these levels, if this neckline is broken, you can see it by yourself as well. So, but we know that this is just drawing on the chart until it's confirmed by the market. So as long as we are above this neckline, I think that this triangle interpretation is still in a very good shape and could actually make a very nice cause a very nice breakout if we see that arise in the next few days, few weeks. Also, if we take a look on dollar side, I mean, we obviously are here below this neckline. We retested this neckline and now trying to make even lower prices. So again, daily close will be important. If we can revisit the yesterday's levels, then I think that would be a really nice confirmation that we are headed away from this neckline and much lower prices could be coming. So the dollar could be headed lower, which makes sense regarding the stock market, which, however, could stay sideways if not really bullish. Another interpretation for this dollar index could also be here a triangle if we bounce. But as you know, Dale, yourself, the most important is that in the first rise here from September lows to those September highs, this was a 3-wave move clearly. Right. You cannot count this as a 5-wave structure. So either that's already the whole corrective pullback that is completed, or maybe it's part of a complex correction if we stay sideways here, consolidating. So in either case, I think that we are going to see sooner or later more dollar weakness here.
Greg, could we see, the first replication of that 3-wave for A from where you have B and get something of equality from B similar to what we had on the first 3-wave?
You mean advance, like for a move up towards 95?
Yeah.
Yeah, I mean, that would be also be very possible. But since I don't see any significant rise here in impulsive fashion from the recent
Oh,
swing lows,
okay.
I just think that for now it's better to stick with this triangle interpretation. But in both cases, as you pointed yourself, we still could be facing a correction here, even if we rally towards 95. I would not be turning bullish, because then we would not have a sideways consolidation, just more deeper consolidation, but still a corrective one.
Right. Okay. Thank you.
So in my opinion, I think that the euro could still revisit that highs from start of September. 1.2 level is what I'm looking for a potential push higher here into wave 5, and then I would be looking for reversal lower, either after completed of a 5-wave rise here from March levels, or this was an extended wave C. But in either case, I think that there can be a very nice limited upside once we reach a new high here. Also, we can take a look on Aussie. Now, Aussie, I think, could be very interesting for more upside, especially once we have enough of evidences that stocks are also on the way higher. So here, what I'm looking at is a 5-wave rise followed by a complex correction. Now, we don't have enough of data yet to say that this is going to be a deep complex correction. It could also be sideways. But in either case, it's incomplete in my opinion, because this second bounce that we experienced here a few weeks back,
3 waves.
Yes, it was only in 3 waves. So it looks like that we are trapped here in consolidation. Not sure if this is really going to be maybe a double zigzag to the downside, or are we going to face some recovery and then stay sideways. But generally speaking, I think we should focus on this bigger picture for now and just make sure that we stay on track with this uptrend that is in place since March, because as I said, we have seen 5 waves up, and you have also very similar cycles on a lot of commodities. Also, I'm seeing metals in the same pullback here. So if we look very quickly here on gold, I'm also looking here for a wave 4 pullback. Also, still not sure about this wave 4. I think we do not have this low in place yet. But once this market is going to see a bounce, I think that Aussie again could be very attractive on the long side. We just have to be very patient here. And as an Elliott wave guy, what I want to see from the lows before I say that correction could come to an end is obviously, as you know yourself, it's a 5-wave rise. And so far, I do not see this, at least not yet. So I just have to be patient here and just be aware that there could be another dip coming here.
Can I ask you about cable after silver?
Yeah,
because
sure.
I remember a few weeks ago, you had the potential of a pretty negative count in cable, but we got to 61.8 this week, which, you said was a possibility, and that maybe this is a great short setting up here.
Yeah, I mean, from a technical perspective, it's really a beautiful structure. Firstly, you had this that big 3 waves up, but still investors were very pessimistic about the Brexit here already in September. So maybe this first sentiment in September was actually telling us in which direction the investors are positioned. So I'm seeing this as only temporary 3-wave rise. We are now facing this same trend line. So even if you're not an Elliott wave guy, you would probably notice this trend line and the 61.8%. Right. So this Elliott wave structure, it's just another tool or confirmation why we really could be reversing lower from here. If we go to the 4-hour chart, again, you have only 3 waves up. We are not seeing this wave B levels broken just yet at 1.29, but when this happens, that's when real bearish acceleration may may show up here. So yes, we are stepping into very nice technical resistance zone. We are the 61.8% here. As you said, there's a wave C that equals the wave A, and there was a triangle in the middle. So for those who are familiar with the Elliott wave principle, would probably recognize this as a correction here up from September levels.
Thank you, buddy.
But from a trading perspective, I mean, risk 440 pips, it's quite a lot, right? So what I personally am waiting is on this, as I said earlier, 1.29 level. If we get these 5 waves down to this level, then I would be looking for opportunities to short after rallies, after a bounce against the highs. So I want that market actually confirms that maybe this correction has really ended.
Got it. So with your look, your potential look on Euro, more constructive than cable, and we had one wild day, and you're okay. You read my mind.
Yeah.
Okay. Yeah.
Yeah. I mean, Euro pound. It's very frustrating actually, because of each time you have positive and negative news about the Brexit. So obviously you have this volatility on the both sides. But looking at the whole price action, it's not really directional. That was a very strong move and directional here at the start of September, if you agree. Well, here we have an overlapping decline.
Yeah.
Chop. We are at the 61.8%. There is another possibility of drop towards 78.6. Why I'm looking and highlighting this is because with the recent swing higher here, we haven't seen a broken level here below October 14th. So I'm thinking that this is only a temporary bounce and that we'll see a retest here. So if that's going to be the case, then our time for a reversal should be next week. Also, for those who are trying to play cable, I think that it's very dangerous, especially ahead of the weekend, because you never know what will again should be the case for the weekend. So I think there's a huge risk involved, and that's why it's much better to wait on the Monday's reaction. And as I said already on cable, wait on a 5-wave fall. Or here, I should wait on a 5-wave rise, meaning a new bounce from the lows, and then this could be constructive on the upside.
Okay, we're getting two requests. One is for your look at Bitcoin, and one is for USD CAD.
Yeah. Okay. First, let me cover dollar CAD. Dollar CAD is here. I believe it's trapped, or it could stay here in consolidation, but there is a downtrend, no doubt. The downtrend that is expected to continue after this correction is over, and then I will be looking for a drop back towards January levels of this year to be taken out, and potentially even extension towards 261.8 of wave 1. That's a typical target for the full 5-wave cycle. So I remain bearish here on dollar CAD. But for the near term, I think that we should be aware of potential sideways consolidation. My main concern is crude oil. Okay, now crude oil is not really, it's higher, but it's not really convincing. Okay, it's very slow and very undecided moves here, and it's probably due to the lockdowns that are spreading here in Europe, and maybe this reversal or potential drop into wave C will be a next shock with a delay. I remember well back in March when we have the S&P 500 and crude oil both trading around the highs. It was quite strong market despite spreading coronavirus from China to the other parts of the world. So we had a few weeks left before we could potentially actually realize that sooner or later these stocks should come to the downside, and crude oil as well, because it was spreading and it was impossible to stop it. So now we have the very similar situation, and that's my only concern about the potential risk of scenario is that this coronavirus, those lockdowns will again shake these markets. But I'm sure that the world is prepared much better than back in March when everything was new. So we will see we'll see how this responds. But if we get another shock, I really doubt that will be such a stressful and big move like we have seen back in March. So I'm thinking about this wave C that could actually be opportunity once it unfolds on the long side. But maybe 2021, that's a real time in 20.
Oh yeah, and you know how I remember your work. I bet you'll be looking for longs in oil in January because of your. I remember your study about how many significant lows started in January.
Yeah, if the market was trading
going down into it,
yes, into the year end, exactly. And that could be the very similar pattern. If we get this wave C through November and December, I think that there, yes, as you said yourself, it could be again interesting pattern. And I'm sure I will bring this on in the next.
See how I remember?
Yeah, very good actually. You just remember me. I have to put this on my list because I have too many charts in my head, and definitely this should be considered. Definitely.
Okay.
So we have time left. Yes.
Yes. Yeah. We have no interview, so I mean, you could go as long as you want.
Yeah. Till Saturday we can talk. Are there any questions for the FX? And then I will go to.
Okay. Any more FX? I don't see any more FX. I just see nat gas.
Let me just check my list if I have here something. I mean, Pound Aussie and Euro Aussie, these two are very interesting as well. I mean, if we are going to see maybe stocks really recovering after the elections, then we know that risk on means that Pound Aussie and Euro Aussie could actually sell off because investors obviously have a lot more confidence into the commodity currencies and also because of commodities. So I'm looking here at Pound Aussie when it's moving this into very nice potential resistance here at 1.8410 levels. It's also here the previous swing low of this uptrend. Then you have the 38.2%, okay? And then you have wave 4 that equals to wave 2 in the same area. And then you scale to the lower time frame charts and you see 3 waves up. With wave C equals to wave A, again, at the same level here around the 38.2%. So that's another very beautiful picture actually, which may indicate that, yes, that pound could face limited upside in general, not only against the Aussie. So we will see if we get a little bit more sharper sell-off. This could still be a wave 4, but if we start breaking this trend line, this corrective channel, then this would be confirmation that the top has been put in place and that we are headed lower after pullbacks. So Pound Aussie is definitely going to be also on my watch list here. And since I mentioned the Euro Aussie, this one is also very interesting. Firstly, just the simple technical charts about those levels. As you can see here in this range that we moved to recently, always when market moved here, it failed to stay strong. And now this has actually repeated back a few days back, and looks like we are forming a very nice reversal here. And also, if you love the candlesticks, I mean, watch at the weekly close today, okay? So I'm sure that a lot of you will see this as a potential bearish indication that we could see much lower prices in the next few weeks, while the recent swing high, the recent highs, I mean, highs of this week will stay in place. So we'll see if we get here also an impulsive sell-off, but because of pound, if cable will sold down while the euro dollar is going to stay sideways, then obviously Pound Aussie is the best choice.
Hey, Greg, I'm sorry, I had to step away for a few minutes. Did you cover, because I didn't, and I feel bad that I didn't, did you cover Bitcoin or any of the cryptocurrencies?
Yeah, I was just planning to do that.
Yeah, I was going to say because we've had, just this scream higher in Bitcoin, and obviously Ethereum is playing some catch up. And so how do you feel about these cryptocurrencies?
Yeah, I mean, Bitcoin is trading higher on this PayPal news. But what we see on other altcoins, especially Ethereum, I still think it's a little bit too soon to say that we are going to stay going straight to the upside here. So if I quickly go to Ethereum here, okay, let me just make this bigger.
You know, guys, while you're talking about those two, I interviewed someone this week that showed a market analog where Bitcoin moved much more like gold and Ethereum moved like silver. I mean, the charts were pretty identical, and they're acting the same way now too. You know, gold's stronger than silver.
Interesting.
So anyway, yeah.
Yeah, very interesting.
Yeah, I mean, he showed the charts. They looked, looked like a fractal, and they were different instruments. So.
Yeah, I mean, so on here on Ethereum, we have seen a very strong drop here for September, but now we are making higher highs here on the short-term charts, but not really convincing yet. I mean, we are at the 61.8%, so it's a do-die zone here. I definitely would not be turning bullish here. If I would be bullish, I would be just waiting on these levels to be spiked out, and then let's see that we run above 460. Then maybe I would start looking for much higher prices. But for now, I think it's a very important level where actually we should be aware of this resistance. I mean, you have potential wedge here. You're now at the trend line right at this 61.8%, and you have a free waves up only from those lows. So maybe Bitcoin is just because it's much more popular than other altcoins. If you see Bitcoins moving to the upside, but others do not, I mean, then whole cryptocurrency is not really currently in a very strong uptrend. It would be a totally different story if Ethereum would be trading at the highs, but it's not. So I think we should be careful, or at least be aware of a pullback on Bitcoin.
Okay, great.
So also here we have seen a move out of a triangle. That's one of my wave counts here. So as you know, when important news like this with PayPal hits the market, hits the wires, I mean, a lot of investors will try to run this trend, which is fine. But if this happens at the highs of the year, I mean, then you know where the sentiment is. So when something is very strong and at extreme, I'm very careful and should be aware that actually this could be the opposite reaction.
Yeah.
Got it. Okay. Well, let's see
Great
if we can
looks,
stop
Greg.
there. Hey, Greg, I'm gonna bow out. I know you might have some other questions. I got to get over to the guys that I trade with and into our chat rooms. But I want to say thank you so much for being here, Dale. Thank you so much. I'm not sure if Stelios is still around, but you guys have a great weekend. And Greg,
you too,
we always
buddy.
appreciate your analysis. Thank you.
Okay, Blake. Enjoy. So, Gregor, you want to carry on or wrap it with one more?
I mean, yeah, we can continue if you want.
Okay. I'm looking at good take. Someone. Do you want to comment on you're looking at nat gas?
At natural gas, I can take a look.
Yeah, Steve.
We have seen a sell-off recently. If I'm not mistaken, just a second.
Came out of the hole. USDI and an interesting one that maybe we could wrap it with would be Aussie CAD.
Aussie CAD.
People are paying attention to that again.
Okay, so regarding natural gas, I mean, if we look at this long-term picture, now it's doing a 15-year cycle, and this was from 91 to 2005. Okay, we have seen a 15-year cycle of an uptrend. Then we have seen a 15-year cycle of a downtrend, and 2020 could be potential low. and in meaning this year. I mean, we are also seeing this constructive pattern suggesting that this could be a reversal in the card. So overall speaking, I would not be surprised to see this market reversing to much higher prices, but in the near future, of course, because of volatility, there's a chance that we'll see a deeper pullback. But generally speaking, I think that this market is forming a very nice base, actually.
So were you just looking at weekly charts and you just noticed this time frame for the cycle, or you knew going in that it had this tendency?
Excuse me?
You discovered it, when you discovered this 15-year cycle,
I mean,
just from looking at it, you noticed it, right?
Yeah, exactly.
Okay.
Because I saw the very similar personality here when the market moved to the upside here and when market declined. You can see very similar structures. It's not a stable recovery, not even a very directional drop as well. But you can see that price moves were very similar.
Everything looks corrective. I don't see anything impulsive throughout all these years.
Commodities in general are very, very hard to track from an Elliott wave perspective. So, I mean, the short-term swings on commodities could be very useful, but for the longer term, I think that cycles are the one that we should observe. I mean, because of the cycles, we can determine if we are maybe at the extreme of optimism or extreme of pessimism. So what I see here, we are at the extreme of pessimism, meaning that we could be at the start of a new or next cycle. So that's what is also the Elliott wave, because it tracks the sentiment.
Okay.
So
yeah, it looks like an ending diagonal at the bottom there, right?
Yeah, like a wedge, yes.
Yeah.
So I mean, the price is low. There will always be natural gas important. There will be always demand. So if the price is low, then if there is a demand, then you know that sooner or later it should bounce. And if you have these cycles in place.
Yeah, and if Biden gets elected, he's going to cap a lot of these fracking wells. Maybe the market's seeing, there's not going to be as much supply if there's a blue wave.
Yeah.
Anyway, Aussie cat.
Aussie cat.
Yeah.
Actually, we can just do it here. I mean, this looks like like another commodity.
Yeah, it does, because they're commodity currencies.
Yeah, of course. It's definitely bullish.
Yeah.
I mean, we have very nice constructive recovery here, very strong bounce, and looks like we are now consolidating. So I would assume we go higher. I mean, well, very nice structure here. You have this 5 waves up, and now you are making this pullback.
Yeah. So you get your fibs out and ABC. Okay. Yeah.
Now, usually when I'm looking for a retracement, or at least when I try to say that maybe the correction could end, I want to see the 38.2%. It's not always the case.
Better when it's more bullish when it's shallow, right?
Yeah, exactly.
Okay.
Also, I mean, this support here is very important as well, I would say. The previous swing highs here. So, I mean, it's a very, very nice, clear structure.
Okay. Thank you.
Anything else?
Yeah. So, great review into the weekend. Sure gives me plenty of food for thought with you coming in on a Friday. I want to thank you very much, Wizard, for coming in and edifying the community today.
Yeah, thank you.
Good.
Thank you everyone for attending, and have a
Good
good Friday.
stuff.
Have a good weekend.
I just want to embarrass you that when one of our attendees found out that you were going to be here, Real K Bunky One said, so happy that at Gregor Horvitz, the cute one on ForexAnalytix team will be going over the charts in a few minutes. So you're the cute one.
Yeah.
I don't know if it's a guy or a girl. So anyway, it's just K Bunky. Anyway,
Maybe we should change names to real names.
Yeah, let's do that. So yeah, they can't hide anonymously. Anyway, buddy, thank you very much. Have a great weekend with you and your family, and hope you guys remain untouched with this new wave starting. And thank you for all the great work that you provide for the team. Thank you, buddy.
Thank you, guys. Bye-bye.
All right, everyone. And that's going to be a wrap for the week, right? Well, we laid it all out there on the floor for you guys this week. So the 300 of you that are still there, 10% should sign up today. And don't just count your waves or your candlesticks. Count your blessings. I hope you and your families remain untouched. I hope that America gets through this turmoil. And I look forward to looking at everything over the weekend and making a plan. So your best trades are going to be planned in the next 2 days for the following week. If you don't believe me, try it. Plan your trades this weekend and then just execute them during the week. I'll see everyone. You're very welcome, Sam, Didier, Brock, all you guys. Money never sleeps. And I'll see you guys next week. Adios.